All right, we're doing a homegrown textbook here. How do you spell it? H-O?
HORNGREN.
Right, homegrown. It's a famous cost accounting book publisher. They also make other accounting books. I think they're known as, they're definitely known as, I've read some of their cost accounting books. They're the book we're using here today.
So,
And we started the problem out. I didn't know all this stuff. So erase that, put the beginning balances, and that'll be good practice for you anyway. We had cash, we're gonna put those back in there. What was the big, so put your beginning balance, what was cash?
it says balance was 2,400.
Put 24, no, the other side. Doesn't carry on, they can't carry on that side.
Okay, only on this one.
On the left's the debit side, that's why cash is called the debit card. It's called a debit card, right, for cash. All right, what else we got? You know, we put a dollar sign, in this case, we'll presume dollars. Next.
Accounts receivable.
Make a T account to the right of that, right parallel with cash. With cash, see cash, right next to cash. And that's gonna be in right A/R. Okay, and write down the amount in there.
1,800.
Okay, next.
Supplies, 0.
Supply, don't worry, just what balances?
Liability, so it'll be land.
Land is not a liability. What, do you have land? Is there land with numbers next to it?
14,000.
All right, then make a T account below account receivable a little bit for land. And she has nice handwriting, which is good. And how much is land?
14,000.
Land is an asset, as is account receivable and cash. An asset means something that will give probable future benefit is the legal definition. Or a legal definition is a resource that we have claim to that we can put a number on. In other words, land is a resource, we own it, and we can put 14,000 on it. It's quantifiable because why? Because that means we bought it for 14,000. That's called the historical cost principle. I know if that land is on the books for 14,000, that's the historical cost, okay? That's called the historical cost principle. That's its frill. And what's next?
Accounts payable.
Okay, now go to make your liability section, make a T account for, and then put that's right, over there, and AP, A/P. That increases on the right side, That's why we keep it on a separate piece of paper. Payable increases on the right side like equity, so put a plus on the right side, that T account.
Right here.
That's correct. And how much is it?
$3,000.
Okay, put it in there. Next.
Marin Crone Capital,
How much?
$15,200.
Put that in there, raise that, or do whatever you gotta do, but, well, raise that, put 15,200.
Right here.
Well, yeah, someplace. Get rid of that one next to it, we've gotta put that under it. Okay, OE. Okay. And Takesha helped us with our project today, appreciate that. Okay, and then now, is that all? Now what you would find out, Takesha, is that if you added up cash, account receivable, and land, it happens to be, let's see, 24, 34, 4,200, it's 18,200, you see.
An asset.
And assets, total assets equals 18,200 if you added them together. And guess what? Liabilities and owner's equity also equals 18,200. So it's in balance. Meanwhile, we had the first two journal entries. First was cash, she's gonna go repost them. What happened was we invested, 15,000 more was invested, so cash increased 15,000. She debits cash 15,000 in entry 1, put a little 1 next to that. Gotta be a little 1, you gotta put a number, a chronological number. Then, post up to owner's equity, 15,000. On our second page, if you're doing that loosely at home, put a 2 next to that. Oh, she did. A 1, rather. Then what happened was we performed service, which we talked earlier, was a cash increase 1,200, which is why she debited cash, and then she's gonna post up to revenue. Okay, she puts that there. She goes down to put in another piece of paper to revenue. And we got that. Next, we're ready to go.
Right, and then, now it says paid off the beginning balance of accounts payable.
Okay, so it means we paid off the whole balance. So you see that account?
We gotta bring this to zero.
Is that account gonna increase or decrease?
It's gonna decrease.
Debit or credit, how much?
Debit 3,000.
Correct answer, very good. Put a 3 next to that. Okay, okay,
So
and
we take that, and then we move that to, no, pay it off.
to what? Move it? I mean, move it.
Okay, go ahead.
All right, so go make your journal entry. And so put an account payable there in your journal entry. Takesha's a blessing, a nice young lady, and I've known her for a short time, but she's really easy to work with, and she knows she's pretty good too. She picks it up quick. So therefore, debit to account payable, 3,000, do it. And what's the other account? So we got a 3,000 credit. Put 3,000 on the credit side also, underneath it, where it would go. Now, the reason I know that has to go there is because Takesha, what's called the double entry method in accounting means that debits have to equal credits on every journal entry. So we must have another account. What's the other account?
Where goes the accounts payable?
That goes underneath account payable. Like 2 accounts have to get affected on every journal entry, in other words.
Right, so I would assume that, because it has to stay on this. So if we pay something out,
I'm just asking, what's the other account? What do we pay with, for instance?
where do we get the money from?
What do we pay with? You can pay with cowboy boots, your stereo. If you owe somebody money, they might take something besides cash.
They could take revenue.
Now, revenue is a word that means to perform a service. What are they gonna want?
They're gonna want some type of.
What do they want? What's the company gonna, what do you usually want when someone owes you money?
A check, cash.
You want cash, so cash is the other account. Write down cash underneath. What I'm trying to drive at, Takesha, you just misunderstood me, was that cash is decreasing, therefore a credit to cash. So go post up now. So just because of the film and stuff and the time constraints.
3,000.
Put it to the top to save space. Okay, so she was 3,000, entry 3, and she already posted up to the account payable. The point with the payable, Takesha, is it's 0, that's all.
Okay,
We're ready for our next journal entry.
yes, number